Ladies and gentlemen.
Welcome to the Block Crunch Podcast, the go-to podcast for investors and builders in crypto. This episode of the Block Crunch Podcast is brought to you by CoinFlex and Paraswap. Stick around to learn more. Hey everybody, I'm super excited to have another episode of the Block Crunch Podcast with my good friend Richard Chen, who is general partner at 1confirmation, one of the earliest crypto investing funds. And if you've been following the show for a while, you know we did an episode recently back in August 2021 talking about Richard's investment thesis and some of his general thoughts around NFTs. As an early investor in both Opensea, SuperRare, and a few other projects that became massive successes, I'm really interested in how Richard processes NFTs and how he interprets the themes out there and how he picks his investments as well. And since August, there's a lot that happened in the past few months. So I'm really excited for this episode to catch up and also to get Richard's thoughts on the crazy things that happened in the past 4 or 5 months. So Richard, welcome to the show again.
Thanks, Jason, for having me on again.
Yeah, and I'm excited that this is one of our first video interviews as well. Well, just to kind of get us started, let's jump right into the meat of it. Before the interview, we had this discussion around whether we think a basket of blue chip NFTs will outperform, say, the top 10 altcoins by market cap. So I'd love to kind of get your thoughts on there in terms of your outlook, right? And if you have to invest in a basket of altcoins versus a basket of NFTs for the next, say, 5 years, where do you see more upside?
Yeah, well, it's hard to give like specific like price predictions or anything, but overall, I say like the NFT market is still more nascent compared to like cryptocurrencies. So I think one thing that's changed in the past year is we've had more institutional adoptions of cryptocurrencies like Bitcoin, ETH, and others, which is a double-edged sword. It's good that there's more legitimacy in this space, but the downside is that now crypto is pretty macro correlated with like Fed monetary policy. So I don't think Bitcoin ETH will have like nearly as much upside as it did, back in like 2014. Whereas, what we're seeing with NFTs right now is, kind of like 2017 or earlier, if you were to like make a similar historical analogy, where it's still like a very nascent asset class. It's a lot of speculation. 10K PFPs is kind of like the ICOs of 2017, but like done a little bit more artistically and tastefully. But because of that, I think the most successful projects, just like how the most successful projects from the 2017 era outperformed like significantly. I think that will probably happen with NFTs, where like the top NFT projects and collections will like outperform altcoins and like the broader market significantly.
That's really interesting because my initial thought was actually to disagree, just because I feel like there's more activity to benchmark to for a lot of these altcoins, especially in DeFi, where there's like actual cash flows you can model out. Whereas for me, a lot of the NFT PFPs have always been a little bit amorphous in terms of where the value comes from, which I guess brings me to my next question. In a previous interview with an NFT collector called DeFi, he mentioned that one of the core heuristics he uses when he invests in an NFT specifically is to see who will buy from him at a higher price. So I'm curious, what you think about that? Like, are there other ways to think about value in NFTs? As opposed to just thinking, who's going to buy from you at a
that literally is like the definition of a bubble, right? Yeah. It's like, it's the greater fool's theory. It's like, I'm buying something just because some greater fool will buy from me at a higher price down the road. But I mean, look, it's, kind of at the end of the day, it's like culture, it's like art. Is like, if you look at like the traditional art market, like why are Picasso's worth so much? Whereas like some random artist who like makes just as good art, like they're not worth like a lot. It's just because a couple of whales and big collectors basically move the market and decide what's valuable. I think that's going to be the case where like the top collections are in like diamond hands, and like those collectors will ensure that the floor price like doesn't drop below a certain amount. It's just like, if you go to an auction house and like there's an Andy Warhol up for auction, like the existing Andy Warhol collectors will make sure that it gets bid up over a certain price, because otherwise it'll devalue their collection. So there is like some notion of like a floor price with NFTs.
That's quite interesting. And what, I guess on that note, what would you say are some of your favorite bets or some of your most successful bets in terms of like specific collections so far?
Yeah, I mean, our most successful investment, this is out of the fund, is probably going to be the Genesis mint on SuperRare. So it was basically the very first NFT minted on SuperRare. This was back in April 2018.
Oh, wow.
The owner of that, like, I decided to fire sale. So he listed it for 100 ETH, and we snatched it up immediately. But because of like the lindiness and like narrative around that, like that could potentially be like a fun returner, just that one NFT alone.
So you purchased it at 100 ETH.
Yes.
Oh, wow. And this is back in 2018.
No. The NFT was minted back in 2018, and then we made the purchase. I want to say January 2021.
Mm-hmm. Got it. Got it. And I guess when you saw that NFT, what was the process behind it? Like, what made you decide that, hey, this is going to be a good investment? Was it like evaluating the artist behind it? And if so, how do you compare different artists and so on?
Well, it's more of like getting like we wanted more exposure to super rare. So like we invested in equity in the company, and like an obvious way to like support the project was to like buy the very first NFT ever minted on the platform. Um, yeah.
That's interesting because in our previous interview with these as well, that's one of the things he mentioned as well when he looks for NFTs to invest in, which is this idea of historical or cultural significance, right? Usually, if it's like one of the first NFTs on a blockchain or one of the first NFTs ever, then it might probably have more value. Is that one of the criteria that you look for as well, like some sort of cultural significance?
Yeah. Like what narrative, what story can like the artist tell? And it's like kind of a mental model is like if you were to look back like 20 years from now in like an art history textbook, as like what do you think will be the pieces that are highlighted in this textbook? And like those are like basically all things that have historical or like cultural significance. And like being first is like certainly a very good indicator of that.
Are there other, I guess, things on your checklist that you kind of tick off when you look for an NFT to invest in, like cultural significance being one of them, and I think you also mentioned, the popularity of the artist being another one. Are there some other kind of traits that you look for?
I say like understanding community building is like super underrated. And like I noticed this a lot with artists, especially photographers who come from like, the Instagram world and like have very big followings on Instagram, but I guess are, probably new to Twitter and like Web3 crypto natives, which like that's largely where the collector base is. And at the end of the day, is like without engaging your community, your collector community, and like kind of giving them value, you're kind of like doing a disservice to your existing collectors. And I have seen like many times where like artists will do like a couple of mints and then just kind of drop off and stop engaging. And that's like ultimately like hurtful to the collectors long term.
So community building, cultural significance, and also the popularity of the artist. All of these sound, at least to DeFi investors, it might sound very kind of almost wishy-washy in that it's hard to measure, it's hard to quantify. I know you do a lot of quantification on a quantitative analysis on Dune, which we can touch on later. But for at least a DeFi asset, for instance, I can model out the cash flows, and from that I can project maybe a target price for me to exit. But for say a PFP or for an NFT, how do you decide what is the reasonable price to exit?
Yeah, well, in terms of exit, I guess that hasn't really been an issue because, like, I personally, like, I kind of just hold my collection, and also for the fund, we haven't sold any of our NFTs, so I guess we'll think more about exiting later when we have to. But yeah, that's like one big difference between a DeFi and NFTs is I think I talked about this in our last podcast is like it's very like left brain versus right brain where DeFi you're looking at analysis, fundamental analysis, cash flows, all of that. Whereas NFTs you're kind of like a talent agent is like you're identifying like culturally significant trends early on, like kind of like being like Hollywood talent agency and betting on those artists early.
And I guess on that note, just to wrap up this part about general kind of NFT process before we dive into specific projects here, how would you go about valuing an individual piece of NFTs, right? Not just in the case of exiting, but say, you see a project with great cultural significance, there's a great narrative, artist is really popular, it's already been listed for, a year or so, so there is a liquid price, and how do you decide is 50 ETH a good buy for this? Is 100 ETH a good buy for this? Like, how do you ascribe some framework around value for individual NFTs?
Yeah, I think the framework people generally use is like comps, is just like looking at historical sales of the artist. Also, like other artists in this, it's like the same category. So, like if you're talking about photography, then like other blue chip photographers with the same genre, say it's like landscape photography, and like what their pieces are selling for. With like very liquid collections like Bored Apes and CryptoPunks, then it's a lot easier. There's like more clear valuation metrics, and there's also like a bunch of projects now that are building models to like appraise value of these NFTs, just because there's a lot more data points like to look at based on historical sales and also the attributes. But yeah, the valuation is still an open question.
Yeah, and I guess that goes back to the point about the definition of a bubble, right? If it depends on comms and the comms started trading down, then the whole thing seems to be able to kind of unravel. And I guess we saw a little bit of that in the past month when a lot of NFTs started to trade down a bit. Is that a concern that, a lot of the perception of value is very much almost like self-referential, right? It's worth this much because it's been worth this much before.
Yeah, I mean that's kind of largely the art market in general, where it's a lot of it's driven by mimetic desire and kind of it's valuable because like other people think it's valuable, therefore it's valuable. Um, you can argue the same thing with like fiat money and a lot of these. This is like kind of a rabbit hole to get into of like epistemology and metaphysics. Like, well, why are these things valuable? Like kind of the philosophy behind that.
That's very fair. And I think that's a great way to pivot into talking about specific projects. Since we last chatted, there has been a lot of new projects. I think Bored Apes was already around when we were first chatting, but then since then, there's a lot of, I wouldn't say copycats, but projects that are quite similar in scope. And one project that a lot of people are asking about on Twitter is this thing called Azuki, which I don't know if you saw.
Yes, I'm not super familiar with Azuki though. I haven't gone deep in it.
I guess just to be more general in like projects like Azuki, basically profile pictures with no other use cases, except for maybe you can display it on Twitter. How do you think these things will fare out? Because there's so many Azukis and Bored Apes out there. Like what separates the blue chips from the rest, given they're all launched, within the same 3 months?
Yeah, I mean, at the end of the day, like these PFP NFTs are kind of like membership passes. Um, and like this is what goes back to my earlier point about community is like how do you ensure your NFT project is Lindy is by like constantly giving your rewarding your collectors with value. So say like Bored Apes, it gives you access to a Discord, a DAO, like in-person events, and then now with the launch of the ape token like airdrops. So constantly like finding creative ways to reward existing collectors is like one way of like kind of keeping these this valuable. Whereas if it's just kind of a narrative and just like a PFP, then it could like stay like culturally relevant, but it's a lot harder to do so when kind of narratives are fleeting and people move on to the next relevant trend.
Before I continue, I'd love to share more about our latest sponsor, CoinFlex. Now, CoinFlex is an exchange that's been around for a while. They're actually doing $1.5 billion in daily trading volume right now. Now, recently, their team reached out and walked me through their latest product, the AMM Plus. In short, it lets anybody earn fees as market makers on the CoinFlex exchange simply by depositing their assets. As of this recording, the 7-day in-range average for ETH AMM pool depositors is 82%. So how does this work? If you're familiar with how other AMMs out there work, this is very similar. You can basically select what price range to provide liquidity for, and the UI even shows you your risk under different scenarios. I also love that they have this cross-collateral system, so you can market make in any market you want, using pretty much any collateral you have. If you know how to manage your risks, you can even access up to 10x leverage while providing liquidity. So this is one of the most creative ways I've seen a company borrow elements from DeFi in a centralized exchange setting, so I highly encourage you to check it out at coinflex.com/AMM. I'd love to share one of my favorite products in crypto with you. Now, whenever I want to trade a token, instead of going to Uniswap, SushiSwap, Bancor one by one to see where I can find the best quote, I just go to Paraswap to scan for the best price anywhere. Because Paraswap aggregates all the popular Ethereum dexes and saves me a ton of time and headache in finding where I can trade something for the best price, and lets me trade in one place. Now the cool thing is they've also integrated with Ledger Live as well, meaning I can now swap at the best prices directly from my Ledger wallet. So seriously, if you're a DeFi trader and you're worried about the security risks of centralized exchanges, but you also don't want to scour dozens of dexes just to find the best price, you have to check out Paraswap. So head on over to paraswap.io/blockcrunch. Yeah, and I guess on that community-oriented front, a project that I really want to get your thoughts on is also LooksRare. So for the listeners out there who are not aware, LooksRare is essentially a community-owned version of Opensea. At least that's how they brand themselves. They have a token out there already. And I think the argument a lot of people make in favor of LooksRare is that Opensea, the incumbent, is not community-oriented because the platform retains fees and LooksRare doesn't retain fee and it rewards its users with its own token. What do you think about all of this? Like, what do you think about LooksRare specifically? And then I guess we'll talk generically about these kind of community-oriented forks later.
Yeah, I mean, if you look at the history of these like community-oriented forks, they all suffer the similar fate, which is like they realize that like ideas are cheap, but execution is way more important and harder. And like I'll give like a few examples. So you have like Ethereum and Ethereum Classic, and like Ethereum Classic was this purist community fork that ultimately died because like the social consensus was on Ethereum. Same thing with Bitcoin and Bitcoin Cash. Same with Uniswap and Sushi. So it's good. Like these community forks are like good at like getting retweets and a lot of capitalizing on like the narrative and like the Twitter drama and hype around it, and also for insiders to make a lot of money from like getting into the pre-sale. But you quickly realize that OpenSea had to grind through like a multi-year NFT bear market just to like build the product that they had today. And it's a lot easier to get a bunch of retweets and like insiders like pumping the price of looks, but then it is to actually build a useful product. And like OpenSea has a really big defensible moat, which is that 99% of their engineering effort is spent on like website search and discovery, UI UX, SRE, like SRE DevOps stuff. And like the smart contracts like have not changed since 2018 until very recently. So it's very different from a DeFi fork, where if you fork Uniswap, then you kind of fork like 90% of the secret sauce of Uniswap. Whereas for OpenSea, there's a lot of front-end stuff that has to be done manually. Like, for example, if you want to filter in art blocks collections, there's no standardized NFT metadata standard. So like how you filter an art blocks collection is very different from how you filter a Bored Apes collection. And all of that has to be done manually. That's also like how, I think we talked about this earlier, how CoinGecko is pretty defensible because token listings on CoinGecko are also done manually. And that's how they get like data like circulating supply out of fully diluted, things like that. So overall, like, execution is really hard. And that's kind of the thing that these community owned forks end up realizing at the end of the day.
Yeah, and I guess another challenge for a lot of community-owned forks is they tend to accrue value much faster than they accrue adoption. I forgot what LooksRare started trading at, but it was a pretty high valuation for a startup that was essentially, a few months old. So I don't know if that makes it harder to bring on board newer people, given there's not as much upside. But it does look like that's a general challenge that a lot of these community-oriented forks suffer from. So I guess just to be contrarian, are there any reasons that, a community-oriented fork like LooksRare could potentially take off? Like, do you see a future for these types of projects?
Um, Not off the top of my head. I'm sure like there's going to be one that works eventually, but just historically, kind of the odds are like stacked against them.
And on the topic of OpenSea, you mentioned that a lot of the front end stuff is manual as well. And recently we started to see some of these aggregation tooling taking off pretty significantly, right? Things like Genie and Gem that allows people to batch purchase NFTs that are listed on OpenSea. Do you see a wedge for those products to become full-fledged companies as well? Or is that a feature that maybe OpenSea could build themselves?
Yeah, so like Genie and big difference between them and community forks is like Genie and Gem, especially Gem, is like way more focused on execution, and like that's super underrated. The other thing is, so like I mentioned that like OpenSeas, they're innovating on like search and discovery front end, like kind of the Web 2 infrastructure stuff, and then but the smart contracts have like kind of largely stayed the same since 2018. But whereas Gem, they're innovating more on like smart contract layer. So I, in my opinion, I call Gem less of an aggregator, but more of like a broker, where they do more fancy trade execution features for NFTs that are really only possible if you write your custom smart contracts. And like, if you look at the Genie contracts on chain, like they're constantly deploying new contracts on chain. All of them are unaudited because they constantly ship new features. And that's how you can do things like sweep the floor for something, or like have dynamically adjusting of like list prices. And like that's all because it's done at a smart contract level.
That's quite interesting. And I'd love to use this opportunity to talk about other marketplaces as well. I think in our last interview, you mentioned that some of the more niche marketplaces like SuperRare and Foundation did not increase their adoption or usage proportionally with the growth of the rest of the NFT market. I'm curious if anything's changed there, and whether you see that to be a persistent trend.
Yeah, I mean, the benefit of being like a generalized marketplace like OpenSea is you kind of like index all the different subcategories within NFTs, and like they'll like within NFTs like different categories like art, music, collectibles, metaverse, real estate, and others. There's going to be like lulls, like kind of bull markets, and like kind of a drawback. Um, so while being OpenSea, you're more anti-fragile to each of the like cyclical nature of for each of like the individual sub markets.
And I'm actually super curious, like how, given that OpenSea is generalized and catered towards all types of NFTs, how did things like Super Rare take off, right? Why was there a space for them to take off, given that, you can probably purchase the same stuff. Technically, you can purchase the same stuff or list the same stuff you list on Super Rare on OpenSea. Like, what did they do that made them successful in their own niche?
Yeah, I mean, at the end of the day, it's like search and discovery and user experience. And when you're just focused on being a premier like art marketplace for like one of ones, you want a really minimalist, like nice UI UX that's like great for artists to showcase their arts, for collectors to showcase their collection. And that's not really appealing if like your one of one art is like sitting next to some random collectible like in your OpenSea wallet. And like that's been a big thesis of ours in the last few months, is like verticalized NFT marketplaces, because they can focus on having a good UX for each vertical that they're building on. So like an example is like a recent investment we made is MetaHood, which is kind of a Zillow for metaverse real estate. And if you were to search, say, voxels or Decentraland land or sandbox land on OpenSea, like you would have no spatial perception of like where that land is relative to anything else. There isn't a map on OpenSea, but if you have a dedicated marketplace for that, then you can have like the Zillow map. You show like where that land is relative to everywhere else. You can have an appraisal for that piece of land. These are like hugely important UI UX features that like OpenSea just can't support because they're a generalized marketplace.
And when you say verticalization, do you consider NFTs on different chains to be verticals as well? Like, would you consider a marketplace only for NFTs on X chain, a example of a verticalized NFT marketplace as well?
Not really. I call that more of like horizontal adoption. So like kind of horizontal versus vertical monopolies. Horizontal you expand into like other areas, and verticalized means like you own the entire stack.
Got it. And this is one point that I think Jake Brookman from CoinFund raised as well, which is this idea that NFTs transcend their underlying chain. I'm curious what you think about that. Does it matter what chain NFTs are built on?
I think it does. So I guess I would probably take the other side of Jake's thesis, mainly because like lindiness is, and like I've also been like this has been a huge discussion right now with Super Rare and like other projects I know that are looking at layer twos. Is like yes, like they're interested in layer twos because of like cheaper gas costs, but they still want the NFTs to be minted on Ethereum layer one because of like the lindiness of like layer one. And then like layer two could be useful for like having a marketplace contract where you do like the auctions and the trading there, but you still want to mint it on L1. So like and like we see this with like marketplaces on Tezos or on Polygon or Solana. Like there's a very different average price that like if the same artist were to mint like on different L1s, like the average price of like pieces on specific L1 is like very different when you compare them to each other. So like I made this mistake when I was like buying stuff on Tezos, and I thought like I was getting such a good deal because like all this stuff is super cheap relative to Ethereum, but it turns out no, like collectors are willing to pay a premium for NFTs from the exact same artists that are minted on Ethereum L1.
Why do you think that is? Is that just a matter of like culture, adoption, or?
Yeah, it's like you're kind of guaranteed that like these NFTs will be around forever, and like there's like a little platform risk, right? And like this was the case with Hiket Nuke, which was the marketplace on Tezos. Is I think they had like some internal drama, and then like the company just like kind of rage quit. Fortunately, like someone else built like a front end mirror, so like your NFTs like weren't completely rugged. But like that's like the kind of risk that you take minting on some other platform.
So I guess the Lindy for NFTs on specific chains is depending on the Lindy of the underlying platform as well. So if you don't
Yeah,
have if you're not as bullish on say the Tezos ecosystem or the Tezos developers, then probably not a good idea to be sweeping for floors on the Tezos
yeah,
marketplaces.
yeah. I guess like of like the marketplace you're minting on and like the blockchain you're minting on. So like there's also like a big price difference between like Super and Foundation, even though they're both selling one of one. Super Rare is curated, which is why like the same artist selling this like pieces on both Super and Foundation, the average price on Super will always be higher than Foundation.
Got it. And this really ties back to the point about discovery that you mentioned as well. And just to make sure we touch on the comment you made, which is verticalized marketplaces. What are the verticals you're most excited for?
I think music is the one that's like breaking out the most. It's kind of surprised me how long it's taken like until now. Um, I think one large reason is because like search and discovery in music is hard. It's not like art where you can just like quickly scroll through like an Instagram feed and like you can like quickly pick the stuff that you like. For music, you have to like actually take the time to listen to it. Um, but yeah, one of our portfolio companies is Catalog, and like I think they have the potential to be like what SoundCloud like kind of failed to do, is like be a platform for search and discovery for new indie artists, where like they don't have to go the traditional path of getting like tied to record labels and management companies and unfair contracts. And NFTs is just the very tip of the iceberg of providing that new business model for artists, for musicians.
And for catalog, are they packaging royalties for artists, or is that
No, it's just like the one-of-one NFTs. I guess I'm pretty like bearish royalties relative to like just the music NFTs. I think two reasons. One is has to do with like securities law, because tying royalties to NFT makes it there's a strong argument that it resembles a security. So there's that issue. And the second is well, actually three. Second is like then you have to like deal with negotiating contracts, renegotiating contracts with like existing record labels and management companies. So that's a huge like business development problem. And then three is like if you just look at the economics of royalties, like the amount of cash flow that you get is like tiny compared to like how much you make selling NFTs. And like there's like I think a musician RAC, like he actually posted a really good tweet thread about this. Is like he compared how much he made from like Spotify streams compared to like how much he's made from NFT sales. And like basically only five of his collectors have earned him more than like cumulative like Spotify streams since he's started.
Yeah, I remember seeing this stat about SoundMint as well, where an artist made more in one NFT drop than he would have made in like 21 million streams. I don't know if that was the same musician, but that was pretty astounding to me. And it's curious you bring up this point about royalties because all the projects that I've spoken to in music NFTs, they have these roundabout ways of going around the securities consideration. So some of them might create a studio where they would purchase your NFT back at a value that's equivalent to what the royalties would be. So, they're not distributing royalties, but it's somehow tied to the value of the NFTs. And then there's this other project that was separating the royalties and the music into like two separate tokens. The royalties can't be traded, but you could be airdropped it if you hold the music NFTs. But for now, it does seem like there's a lot of security, a lot of kind of regulatory overhead for teams that are trying to crack the royalties. Do if we have clearer regulatory frameworks around that, would you become more bullish on these kind of package royalties?
Possibly, but no, I just think like the most disruptive thing is like something that like we haven't seen that doesn't exist before, and like that's like the core invention of like the NFT, not kind of trying to fit like some new paradigm into an existing framework. Actually, Chris Dixon wrote a really good blog post about this a few years ago. I think it's like some title. I think it's something like "Easy Technologies versus Hard Technologies," whereas like you want to be swinging for the fences and like building stuff that's like super disruptive rather than like trying to play it safe and like tie some new framework to like what's already existing in the legacy system.
Yeah, Chris Dixon is definitely a lot more eloquent than I am. I wrote something similar recently. I think I titled the subtitle of that section was called "Skillmorphic These Nuts." So not the most eloquent on my part, but I totally understand the point about building things that are totally disruptive versus skillmorphic and trying to
Yeah,
retrofit them into existing stuff.
yeah. I just found it's called "Strong and Weak Technologies" is the name of his blog post. It
Strong.
talks about examples like the public internet versus like the information superhighway. I guess if you're around in the 90s, you know what that is. Things like Skype versus like voice over IP, examples like this, like throughout history.
That's super interesting. We definitely should include that in the show notes as well. Um, and since we're talking about packaging royalties, I think a good segue is NFT DeFi as well, or like this idea about building financial rails for NFTs. So we've seen two major examples of this, actually three major examples. So we have platforms that let you fractionalize NFTs into fungible tokens. We have platforms that let you collateralize your NFT and then take a loan against that. And then we have platforms that let you lend out your NFTs. What are your general thoughts here? Like, is there a market for these for these DeFi rails?
Yeah, there definitely is. It's still like very early, obviously, because like the total market cap of NFTs like has to grow significantly to support like derivatives and like these DeFi projects. I think the biggest use case for all of this DeFi rails is like kind of answering like the $1 billion question is like, how do I get exposure to blue chip NFTs without being a whale? I actually had a tweet thread about this. There's a couple different ways. You could do it through derivatives, so like kind of like doing a like synthetics, but for these NFTs where you rely on a price oracle. You could do it with prediction markets. You could do it with investment DAOs, or you can do it with fractionalizing NFTs. And I kind of outlined the pros and cons of each approach in this thread.
Definitely, we will definitely include that into the show notes below as well. Well, Richard, as we're coming to the end of the interview, I'd love for you to kind of give us an outlook in terms of are there specific verticals or even specific projects that you're really, really excited for in the next few years?
Um, I think search and discovery is still hugely underrated in the NFT space. So, now there's a lot of like blog posts and like thought leadership, like VC thought leadership about like the unbundling of Opensea and like how Opensea will like become, yeah, I know I talked about this, is like how it will be unbundled like through these verticalized marketplaces. But I think the bigger thing that like no one's talking about is search and discovery. Is like if you use the Opensea search box right now, like today, it's still pretty rudimentary in like how you can find collections. And the key insight here is that people largely go to Opensea with already the intention of knowing what they want to purchase. They don't really go to Opensea to browse around and like try to find new collections. That's like done through Twitter, through Discord, these like off chain like social media platforms. So someone who can build a really nice search and discovery platform, or like kind of like I like to compare it to like Spotify for NFTs, where like you have curated playlists. That's how you discover. That's how I discover new music, at least, is like by going through other people's playlists and like seeing what they curated. I think that's like a hugely valuable tool.
Yeah, definitely. Search and discovery, that's going to be a theme that we're definitely going to be keeping an eye out for. I guess on that note, I know we've already covered this in the last podcast, but in case this is the first time people are hearing from you, what are the best places for them to follow you?
Yeah, Twitter. I'm Richard Chen 39 on Twitter. Yeah,
Awesome. Well, thanks again for coming on. This has been really fun, and I'm really excited to do this again in 6, 12 months and see where we are.
great. Yeah, thanks, Jason. Yeah, excited to see how the space has changed in another year.